The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 12th terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, thanks so much for joining me. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is really what it's all about. And what's it all about? Well, the tool that I want to talk about here just as we kick things off is that tool. It's all about energy, because that's really what is going on a consistent basis. You know, the markets we trade, the life that we lead, the conversations that we have, the interactions that'll take place all day long, it's all going to be about energy. And communication, folks, is all about energy, and that energy is one of two sources. It's either feminine energy or masculine energy. And what you can, you've heard these, and this is not gender specific. We all know men that have feminine energy qualities, that might be what is, and we all know women that have got masculine energy. And you know what each of us know? We know either by definition or we know visually what those two differences are. Well, the market is nothing more than a group of participants, and it really is all about energy. You know, there's all these books out there, you know, men are from Venus, women are from Mars, or which maybe it's the other way around. I think it's easiest to just simply break it down into energy, feminine and masculine energy. And what's that really all about? If I break it down for you, I'll break it down like this. I like to think of it more as like a game of baseball. In fact, last night before I fell asleep, The Field of Dreams was on, one of my favorite movies out there. And so that's why I said, well, I'll just talk about baseball here this morning. And when I talk about baseball, and I take masculine energy and feminine energy, and I take a look at the stock market and what each of us are forced to do each day with regard to our trading and our investments, it is nothing more than a game of what we'll call pitch and catch. And feminine energy is all about always throwing a pitch out to you. And that's what the markets are doing on a continuous basis. Are they going up? Are they going down? And what it really requires you to do, and this is not gender specific, it really requires you to be able to catch that pitch and then make a decision. That's what masculine energy is all about. Masculine energy is receiving that pitch, stepping up, doing whatever it is that you need to do, whether it's exiting a trade, whether it's adding to your trade, whether it's entering a trade, but it's really being able to step up with conviction. That's all the market does. In fact, if you're looking to increase and better your relationships in life, understand that that's how it works in life as well. It'll work all day today. Take a look at the interactions that you have going on, and I promise you that there needs to be a pitch and a catch. There needs to be a pitch going back and forth out there. That's what the markets are doing. That's what happens in life. At least that's how I lay things out. I think that's the easiest way. And that's what the movie last night, as I was trying to get some shut-eye, The Field of Dreams, just kind of reminded me about. So I want to first say thank you to Tom and Basil for filling in for me yesterday. It is great to be back with you. Of course, two great stallions there to fill in and kick off Monday's show for you. So again, thanks for them while I was out for the day. As we take a look here at these markets, we've got the Dow futures off just slightly now. Dow futures down about 13 points, traded out at 14,368. The ES mini down really about 2 points here, so a flat open, trading out at 1549. Nasdaq futures off 6 points. You've got, I believe Apple is trading down just a bit here, so having a little bit of a drag there. Russell 2000 down a bit, but of course in the marketplace right now, what we've got moving, the big movers and shakers in the market, really the commodities. We've got gold trading up $14 right now. That's up a full percentage point, trade out at $15.92. Silver up a little over 1%. That's up 34 cents, trading out at $29.19. Light sweet crude, that has had a pretty nice move this morning, up $1 and change, up a little over 1%, trading out at 93.15. You got high-grade copper up 1 4/10% this morning. That's up a nickel out there. Across the board here, over in Europe, the DAX is really totally flat, up 7 pennies. The FTSE is up $5, so we call that flat. Over in Asia last night, a little bit of a red bath out there. You had the Hang Seng down 200 points. That's about 0.9%. The Shanghai was off a little over 1%, off about 25 points. And the Nikkei taking a little bit of a breather, Boy, that has been a rocket ship. Down 34 points. That's about 0.25% out there. Our call number is 877-927-6648. As we begin taking a look at this markets here, we'll stop in and take a look at the ES Mini. We'll take a look at the 30-minute contract here. What has it done here this morning? Well, number one, if you take a look at the move coming off of 7 o'clock yesterday, you had a low out there of 1540. Makes a move up. The question is this going to be day number 8 in a row with the S&P chalking up another gain out there as we take a look at our baseball scorecard in the marketplace. You did have what you can see here at that price point, what I've got on my screen. For those of you that are just listening on the radio or tfnn.mobi, thanks so much for doing that. Remember, this show is broadcast live. You can get the live stream of this on your smartphone device simply by going to the homepage of tfnn.com. Over in the right-hand side, what you will see is you'll see a little box with 3 smartphones. Click on that little bugger, and you'll be able to see this streaming live to you. If you're listening just simply audio-wise, remember you can always catch the archive of this show on Channel 9. Why would you want to catch the archive? Well, if you are a disbeliever, a non-believer out there in these Fibonacci relationships, well, maybe I can convince you otherwise. Because if you take a look at the price point, there's a terrific tool that I've got on the charting package that I use out here. This is Ensign Windows, but the reality is I teach you how to identify these areas just with the tools that you have on your charting system. So if we take a look at the ES Mini as it's coming in the 7 o'clock time frame yesterday, well, we can see that it was making a 1.618 expansion. Remember, there's basically 5 basic numbers that you want to make sure are in your arsenal: 0.382, 618, and 786. Those are retracement numbers. And when I mean retracement numbers, we're taking a look at 2 points in time. We're taking a look at a significant change in trend, what I call the major intersections in charting out here. And those major intersections, you also then have the expansions. The expansions are 1.272, 1.618. Of course, you say, what does that actually mean, Steve? Well, if we take a look at coming into the time frame here of 7:30 in the evening on March the 10th out there, what you'll see, and that's where my cursor is on the chart, you'll see that the low out there is 1542.25. That was the ES Mini. Again, this is a 30-minute chart that we're looking at, but it works like this on all time frames. Absolutely. And you want to respect these numbers out here, because it's where you will see people let off of an elevator in a potential change in direction. Now, the more numbers you have converging in one spot, boy, that tells you you're in a real strong either support or resistance level. Right now, we're going to take a look at a support level out here. Just take a look at the way that the market reacted. So if we start with that low, 1542.25, 7:30 in the evening on the 10th of March, and then what happens, the major intersection gets formed up here as it's making, quite frankly, a 0.618 retracement coming off of a high, but that number we're taking a look at coming into the 11 o'clock hour in the evening on March the 10th, that high out there, 1545.25. If we took those 2 points and we just measured the difference and you multiplied that difference times 1.618, if you subtract that from this high out here at 11 o'clock, 1545.25, it'll take you all the way down approximately here to the price point at the lows that came in at 7 in the morning yesterday. That low out there being none other than, where's the low here? I got to find it on my screen. Let me wipe my glasses. 1540.50 out there. Well, what else do we have converging at that same point? We take a look at a major intersection. We take a look at this hammer candle. This hammer candle occurred on Friday out there. Friday, in fact, as Tom and I were doing the Nadex Bull-Bear binary option hour. And, folks, if you are in the San Mateo, if you're anywhere near California, go to the homepage at tfnn.com and sign up for this Saturday's workshop. Out there, dynamic trading strategies. You're going to have Tom O'Brien and Daryl Martin. What a great way to be. I mean, an intimate session out there. Plus, you're going to walk away with the prizes most likely. So go sign up. Now, as the ES Mini was moving down into the 10:30, this was after Jobs Friday, formed a hammer candle out there. What we know about hammer candles, that absolutely tells you where the bulls are hanging out. That's why if you close below the low of a hammer candle, that's why I say if you're long, you're wrong. Because the bulls, if they're real bulls, masculine energy out there, they know what's going on as they see price coming down to that area. I'm just using this as an example here, but it works on all hammer candles. That's why you want to be able to identify, because you want to talk about masculine energy or feminine energy. It's all about being a psychologist of the marketplace. And a psychologist just simply means you need to be able to assess what's going on between the bulls and the bears. And the easiest way, the absolute easiest way, is to understand candlestick charting out here. Now, as that hammer was being made and we come off of the low there, that low being 1537, all the way to the high that was put in here. A little kind of it's not a shooting star, but this was coming into the close on Friday. That high out there was 1547. If you measured that difference, the 0.618 retracement of that is where we had the convergence of this 1.618 expansion coming in at 7 o'clock yesterday morning. Do you wonder why price held that level? You've got that nice convergence of two Fibonacci numbers, an expansion and a contraction. You might say, Steve-O, is it really that easy? The answer, folks, lies right here just by taking a look at the charts. It absolutely is. In fact, if you took a look at that candle being made there at 7 a.m., you saw that the bulls were truly trying to take charge yesterday, and that's what they did. Now, if we take a look at what's happened so far after making that run up, so far only a retracement of the 0.382 level. We don't talk about 0.382 that often. But what 0.382 retracements are used for, folks? They tell you that if that's the only retracement that you do, you've got a powerful move underway. Looks like the ES Mini out here, looks like the S&P is trying to chalk up 8 wins in a row. Almost like the Chicago Blackhawks out there. Have they lost a game yet? I don't know. I don't think so. 877-927-6648. Give us a call, folks. Love to hear from you. We'll be right back.
Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. And breaking news out there. Apparently the Chicago Blackhawks have lost a game, lost 2 games, 21-2 out there. So that's still what a great season they are having out there for all of you hockey lovers. Now, let's go back to these markets out here. And we were looking at the ES Mini. We were looking at the 30-minute chart out here. Right now, what we're taking a look at is the daily chart. Now, on the daily chart, it had formed a butterfly pattern. Now, the great things about a 1.272 expansion butterfly pattern. Now, that expansion that we were talking about was off of the September 14th high. In the ES Mini, that's 1468 all the way down to the November 16th low out there. That's at the 1340.25. So, again, you just really take the math. Just take the difference of those two. Multiply that times 1.272. You can also multiply times 1.618. In fact, you would want to do that on anything that you're trading out here, because when one pattern fails, what will happen is price just simply gravitates up to that next level, just like riding an elevator. Why it works like that? I don't know. Go do the study on Fibonacci. It's just simply been around for, well, at least since the 1400s. It's been around forever. Just simply pointed out to us in the 1400s. Of course, myself and you, we weren't around then, but it works, and you want to make sure that you have this as part of your trading arsenal out here. So as we take a look at the ES Mini, when one pattern fails, prices gravitate to the next level. And that helps you in being able to identify where your stop should be, when you should get out of a trade out there. In this case here, we'll go ahead. I'll just use the tool that just simply does a quick mathematical measurement. I'll go from that September 14th high all the way down to the low on November 16th. And so the red line's going across my screen. Those measure retracements as well as expansions. And what we can see here, the expansion, the 1.618 expansion, because clearly this butterfly here failed. And when I say failed, just to said it wanted to be a larger butterfly out there. And that larger butterfly takes you to the 1547 level. What happened yesterday inside the ES Mini, a close of 1551 out there. Does that mean that this pattern here has failed? No, because we use these more like a Jack Sparrow would say, more as, I think it was Jack, more like guidelines out there. And so you're not looking to be perfect, because perfection doesn't exist. You're just looking for a guideline, an area. And as far as how, you got to take a look at the instrument, a $1,500 instrument price point, a couple of points is nothing out there. In this case here, you've made a 1.61 expansion. Is that good enough to go ahead and sell? I mean, for goodness sakes, yesterday was a new moon, wasn't it? Well, the lunar schedule hasn't exactly been keeping time out there. Maybe it doesn't like the mere fact that we're on daylight savings time. Of course, really hasn't been keeping time that well over the last several months out here. It did have a new moon that came in. Could that be a trigger? Well, I will tell you what the trigger will be. The trigger will be the psychology. All you have to do, is this a point to sell? You certainly could. You could take a short position here. Would I recommend it? No, I don't really think so. I don't think if there's going to be a retracement. In fact, the beauty about these expansion patterns here, in fact, we'll go ahead and let me just, from a color standpoint, let me get rid of the small butterfly. Let me go ahead and draw the larger butterfly in here, just so we're looking at the real butterfly pattern now. In fact, then what I'm going to do is in fact, I'll get rid of these retracement levels out here, because we're going to draw some new ones in. Let's assume that this butterfly pattern works. And how would we know if it works? Well, one of the ways is the bears, they can't hide, and they'll have to show up as some type of candlestick. Now, the bigger the bearish candlestick, the more likelihood of a reversal. What would that take today? Well, if you take a look at yesterday's open, 1543, the ES Mini closes below 1543 today. You'll have a bearish engulfing candle at a 1.618 butterfly expansion pattern. Would that be a reversal signal? Yeah, most certainly would. Now, let's just assume here because this works on all time frames and all charts and so forth. So if you take a look at where a retracement would be, the minimum retracement that you would likely get, and this would be your A to D leg. Your A to D leg, your A point, is starting out here at the lows on November 16th. That's your A point. Your B point happens to be the December 19th high. Your C point is at December 27th low out here in the S-mini, December 31st out there. Now, if we just take a look at a retracement tool, our A to D leg so far, we're going to go from the lows of November 16th all the way up to the high of this morning, yesterday, in that 1547 level. What you'll see is right around 1470. Right around 1470 is your 0.382 retracement. That would be the minimum that you should expect. Now, the cool thing about that is if we go a little bit further to our left and see what else is hanging out around 1470, what you will see is that 1468 happens to be the high of September 14th. So should a retracement begin, which would be just normal, which would be good for the bulls out there, that's where, at a minimum, you should see the ES Mini move to. What you can also do is take a look at that C to D leg out there, your retracement on that level, and what you can see is a little bit lower is the 0.618. That gets you back into January 2nd. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow off 11 points. S&P's off 2. Composite down 10. Small caps off a point. Microsoft down 7 ticks. Intel off 13. Google down $4 and change. Cisco off 20 pennies. Apple below that 435 level that it punched up through yesterday. We'll see. You know, it's certainly testing. That's an area certainly of resistance. It gets over resistance. The question is, will it be support or was it a small little false break topside? If Apple closes above 435 today, then you can see a run. What kind of run could you see on Apple? Well, you can see it try to move all the way back up to the top of its resistance zone, and that is the swing point low from January 15th out there, out at the 483.38 level. Of course, what we could also just take a look at is how about just simply from that swing point from February 11th. That's really what set up the resistance zone. That was the first test of the swing point going back to January 15th. And if you go from the February 11th high all the way down to the low that was put in last week, down on March the 4th out at the 419 low, what you'll see, the 0.618 is about 459. So you can see certainly Apple moving up to the 459, but it has to close about 435 today. Right now, traded out at 434.35 out there. We take a look at things popping and dropping, then we'll go peek in on the metals marketplace out here. Popping to the upside, you've got CVR Refining. CVRR is the ticker symbol. CVR Energy, Refining Energy. Net sales for the fourth quarter, $1.8 billion versus $979 million. Way to go out there. Net income, $54 million versus $77. Looks like they had a little cost overrun issue. However, the stock still popping up 9% this morning. We'll take a look at that. Yum Brands out with earnings as well. Their same-store sales in China down 20%, but I believe they had a little bird scare out there, so their Kentucky Fried Chicken got a little fried. I believe that the decline was not as large as they had estimated. That is popping up into that stock chart has a little psychoanalysis. Maybe we'll take a look at that. It's up about 4% so far this morning, up about $3. Micros Systems, MCRS, up a nice 8% this morning. Let's see, no numbers or anything behind that move. You got Mellonix Technologies, MLNX, up about $3 right now. That's up 5%. Dick's Sporting Goods, DKS, they are up about 3%, up $1.71. Did they release some earnings out here? Not that I see. You've got iRobot Corp. Wonder if iRobot is that little vacuum cleaner that runs around. Probably not, but maybe it is. iRobot, IRBT is the ticker symbol, up 8% here this morning. Let's see what they are out with. What did they come out with here? Earnings per share, 16 cents versus 20 cents. That's all that I have on my screen. To the downside, you've got Google leading things to the downside, off about $4. Not a big deal this morning. Salesforce Innovation, or Salesforce.com. CRM is the ticker symbol, off a little over 1%. That would be $3. You've got Yandex NV. YNDX is the ticker symbol. They're down 7%. That's $1.78 out there. And their board announced a stock repurchase program. Apparently, that's not doing the job. You've got Red Hat. Boy, I haven't looked at Red Hat in what seems like forever. How about we'll do that today as long as it stays on my board here. They're down 3% off $1.60. eBay struggling out here down $1.41. That's off about 3%. So we'll take a look at eBay. Fastenal. You've probably seen their stores as you drive around. FAST is the ticker symbol. They're down a tad. But let's go quickly move over into the, let's go first before we go take a look at the gold and silver. Let's peek in on the U.S. dollar index. Let's take a look at King Dollar. King Dollar pulling back here this morning. Now, as we take a look at the King, what we'll see is a number of different patterns out here. Now, the daily, the weekly, we can go take a look at that. If we take a look at the Gartley sell pattern that it created, coming off of the highs of July 24th out there at 84.25, all the way down to the lows that were put in on September 14th. What we'll see is a really nice Gartley sell pattern out here, 0.786 Gartley sell pattern. I thought on my weekly chart it might have been a 1.618 expansion of the swing points as well. Now, this is an important area. This is an important area for the bulls and bears to be having a war. Why? If in this case here, if the bulls are unable to defend or the bears are unable to defend their position, what you will see is a move up to make the 100% move of a move, especially since we've seen this is an area here that has, in my opinion, has solidified as a 0.786 Gartley. And what I mean by that is we actually had the pattern stop a couple of days ago. Yesterday started to pull back. If the market yesterday on this pattern just simply continued to go up once it got that 0.786 level, to me that doesn't really form a Gartley in just simply one trading session. You need to have at least a day here where you see the market start to reverse in order to be able to solidify that program, because otherwise it just means on the move up, nobody stopped at that elevator. And the importance there, folks, is that when a 0.786 Gartley fails, not only will it turn into a 100% move of a move, in this case here, it would take the U.S. dollar index back to the $84.25 level. It also is a big signal that a 1.272 or 1.618 butterfly pattern would take place after it rests when it makes that 100% move of a move. And that's another beautiful thing about understanding your Fibonacci numbers, understanding these Gartley buy and sell patterns out here. What we see here is the market, is the pattern is working as it is supposed to. Now, if we go take a look at some longer-term charts out here, let's go take a look at the weekly chart. Now, as I pull the weekly chart up here on the screen, you're going to notice, you should notice at least a couple of things out here. Let me describe to you what they are. Number one, what we're going to take a look at is we're going to take a look at this rising price channel. This is a rising price channel coming off of the lows. Really, when you're creating price channels versus trend lines, you're looking for co-located opens and closes out here. So I think this is a price channel here was drawn a while ago, but looks to me to be pretty much intact here, close enough. So we can see price was moving inside there, and the U.S. dollar index broke through that rising price channel on the session of September 14th. Now, as it broke through that level, moves down to a price point of 78.72, it was running into a previous swing point out here. A couple of swing points, a couple areas here where we saw bulls really take charge. It's kind of had to get that out. And the bulls, what I mean by that is if you take a look at the candle session, this is weekly, March 2nd, 2012. You'll see that's a very bullish candlestick pattern out here. The same thing as it was coming back into the May 4th, 2012 time frame. So that we can see where the bulls are hanging out. No question, here's where the bulls are hanging out on the U.S. dollar index. Now, what happens with the rising price channel is once you break out of it, because it was rising, if you break out to the top of it, that's not a breakout. You're already moving up. However, a breakdown into, I guess I'll call it a breakdown here. Was it a false break or not? You won't know until you go up and actually retest it. And when you break these trend lines, it's important to understand that the market will usually come back and test those areas. When we were looking at the ES Mini on the daily chart, and we were taking a look at that dead cat bounce, should one occur, and it will occur at some point in time. The question is, is it today? Is it tomorrow? Is it 2 years from now? But it will occur. And the pattern that's in play right now on the daily S&P is that 1.618 butterfly sell. If a move starts to take place, then we took a look at the dead cat area. But more importantly, if you went over to that September 14th high, what you would see is an old area of resistance. Old resistance becomes new support, or should become new support. In a rising price channel, when you break the price channel, in this case here, to the downside, was it a false break? Well, what happened with the U.S. dollar index? It got back up inside there for 2 trading sessions, November 9th, November the 16th out there, and then boom, came back out of it. Now what is the U.S. dollar index doing? Trying to get back inside. Yesterday, looks like it closed just a tad inside, but this is the area here on this rising price channel where we see the bulls and the bears being struggling. Now, where the actual war is. If we go take a look at what's also interesting about this chart here, is so there's a number of tools. So the black line going across the screen, that is clear area of support. No question about it. Quite frankly, the red horizontal line going across my screen here, that is a strong area of resistance. That area takes you all the way back to the swing point of September 3rd, 2010. You can see that area held. It held several times. It was tested back in June of 2012. The week of June 1st, it was tested, and even with, take a look at this bar here. If I go ahead and explode this up on my screen here, take a look at this wide-ranging bar from the week of July 6th out there. That is folks, I like to measure candlesticks power. In this case here, just individual candlestick power from a level of 1 to 10. And 1 being the strongest or more bullish, and 10 being, not sure if that's really a bullish, called a bullish candle, but looks kind of bearish to me. Well, this right here that you're looking at, that on a weekly chart, that's a level 1. So you got a level 1 coming up into a resistance area. How strong is that resistance? It actually held. Not only did it hold, it created a little doji candle that following week. Doji candles mean a whole heck of a lot more when you're coming into resistance than they do. It's just a psychological thing as opposed to when price is moving down out here. So with that real strong class 1 candle out there, as strong as you can possibly get the week of July 6th, that resistance line still held. Is that important for you to understand the psychology of the markets? I believe that it is. That's why I'm sharing it with you. Then you can see here you had the bears actually show up a couple weeks later. That was the week of July 12th, and that's what started pushing prices down. You know, as we pull this back, looks to me as the dance here along the rising price channel as U.S. dollar index tries to get back inside there. Even if it does, we know it's going to run into some very strong resistance, this horizontal resistance coming off of the high of August 27th out there. That's a price point of 83.64. Now, just as long as we're drawing trends and lines out here, if we come from the swing point high on June 11th, 2010, and just come take a look at that high that was put in, the intra-session high for the week of July 27, take a look at that horizontal line. Now take a look at what else has what the U.S. dollar index is running into. It's also running into an area of descending tops trend line out there. No wonder it's got a little bit of a struggle. However, if it blows through this area, it'll just have a little bit further to go before it meets its next test, and that's going to be the test of somewhere around the 83.64. Remember, intraday here, or intra-week, because we're looking at a weekly chart, you did have the U.S. dollar index on July 12th get up to the 84.25 level. So intra-session, if it can bust through here, and it's got its work cut out for it to bust through this level because it's up against some fairly strong resistance out there. That is on the U.S. dollar index. Now, we can go over and take a look at Goldilocks and silver. On the move today, you've got gold up $15 and change, I say. And, of course, I am in a minority, an absolute minority. Gold is forming a significant bottom out here. Forming a significant bottom. The same thing in silver, but more so in gold. Gold today up. In fact, I've got this little, this line here, this little descending tops line coming off of the swing point from February 7th. It's, you know, you had gold actually break through that level yesterday. I saw that as a little positive, but it's such a ultra short-term trend line that I kind of on a, as far as a weighting, I wouldn't be betting my ranch on that. But it did break a little bit of a descending tops line out here. It'll have some work to go because there's mostly non-believers out here. And I say gold is forming a significant bottom out here, at least at the moment. That is my, and it did not get down. I really did wish that gold would have come down and test that black horizontal line. That black horizontal line, folks, that is a strong area of support. That would have been more ideal. But sometimes in life, you just don't get the ideal. And, you know, as I said, you're using these areas here as guidelines, not as exacts. And what I'm referring to on that black horizontal line, that's the lows of September 26th. That had about 360,000 contracts. That formed the hammer of hammer candles out there in the gold marketplace. So the cool thing is that if that low ever gets taken out, and what I mean by taken out, I don't mean intraday, I mean a close below. And that means a close, in this case here, below 1535. You get a close below 1535, I change my bullish position to bearish like immediately. Just like that. Why? Because an old area of support will then all of a sudden become resistance out here. But as long as you've got gold down in these areas here, the reward to risk, I think it's a great reward to risk. Doesn't mean the trade's going to work out, but it is a great reward to risk trade. So you got gold trading up a bit here as far as volume behind the move today, 79,000 contracts. We'll see what this does. Of course, we do see that gold here is working off the oversold condition out here. What I'm looking for is to see what gold does as the relative strength indicator gets to the midpoint into that 50 level. Right now, it's only at 44.03. Hasn't been able to really break the midpoint level. Got up to 42.84 the day of February 26 out there. 42 today, so it's up a little bit higher, so that's a positive sign. If I can see it crack that 50 level, then what we ought to see is at least gold make a move up into that 70% level on that relative strength indicator out there. And then they'll just take things one day at a time. Let's go take a look at the high-ho silver. Silver also trying to make its move. Now, silver here, silver's going to give us an important clue with regard to the metals market today. Maybe gold, we'll go back and take a look at it as well. But in silver, you see this red horizontal line coming across my screen. That really doesn't qualify. This is the trading session of January 4th as a real hammer out there. That actually looks like not a craftsman hammer, but maybe a little bit of a look-alike, but really not a hammer. However, you get a close above 29.24, and I'll be even more of a believer in high-ho silver out there. Right now, trade at 29.19. 877-927-6648. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. In If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Right now, we've got the Dow up 30 cents, 60 cents, I should say. S&P down about $1 right now. Composite off for small caps. Looks like they are down about 79 cents. So a flat market place out here. Going back to gold for a moment. The hammer candle on gold, different than the same. I believe it's the same trading session. I know it's the same trading session. It's the trading session from January 4th. So it just shows you right now silver a little stronger than gold, of course. Silver did not make it all the way as deep as gold did on its retracement. The hammer candle that gold broke through was at January 4th level. You break a hammer, you're long, you're wrong. It's just that simple. In the case of gold, of course, we know that once you broke that hammer candle, the next area of support was going to be down around the lows here of really the September 26th, the September or the December 30th of 2011, as well as the May of 2012 area. Gold never got down there. And so it'd be what I'll be watching for is how does gold behave when it gets up to the 1626 level, that old area of support. We'll see if that really becomes resistance. And it's silver. By paying attention to the silver contract, that is what it's doing right now today. It's trying to take on that January 4th swing point low. That's why I say it close above 29.24. And then we'll be playing that Beatles song, I'm a Believer, even a little bit more than I already am. Of course, I already am a believer, but I'll even be more of a believer if we get a close above that. Light sweet crude here, light sweet crude. If we take a look at why you want to be paying attention to your retracement levels out there, we take a look at the retracement levels. We can see that light sweet crude coming off of the swing point low from December the 11th out here. That low was 85.21 all the way up to the swing point highs of January 30th. We can see it made a pullback, came right back to that point 618 level. My clients and I, we were short light sweet crude. We took profits the day that it was moving down, which was March 1st, into that level, adjusted our stops just to see if maybe we could get a little bit further pullback and come down into the 0.786 level. That we did that with the other half of our position and went ahead and let the market go ahead and stop us out. Now, looks to me like, I didn't want to go long because of just simply the way that, and what we can see here on light sweet crude, it was also moving down into at the same point in time that we were doing that. It was also using that relative strength indicator, weakness in this case here, because it was moving all the way down towards that oversold level. So what this created here, I'll go ahead and put it up on the screen for you, created that little Gartley buy pattern out here. So it creates that Gartley buy pattern as you're coming into an area of being oversold. That shows you the 0.707 if you take a look at where it actually moved down to. And you can also see you could come all the way down to the swing point low, which was back here right in the $84 level. That takes you back to the November time frame. So you can draw these patterns here. So there you'll see the 0.618 of the larger move. But as you start coming down, as you start getting into oversold, I always like the market to go ahead and take me out. However, I do like to manage the asset here. In this case here, it made sense for us to go ahead and take some profits and to go ahead and also tighten up our stop to protect the remaining interest. I did not want to flip it and go long. We did get a bullish candle signal, though. You did get that on March the 5th. Seemed like it got erased on the March the 6th candle out here. Light sweet crude. Now let's take a look at where it should pop to. And where it should pop to is where, folks? You already know this. You know it's going to be Sweet 618, the same place that you will come visit us here if you are in the Clearwater area, maybe celebrating your spring break or what have you. Sweet 618 is $94.76. Looks to me like that's where light sweet crude is going. Folks, time is out, but remember this. You have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. If you're out to start your day, have a great day, folks. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.